Yeah, baby. You know I see you there. I'm happy you're in the live stream. Paul, did we get to 100 views already?
95 right now.
95. Welcome you in, all 95 of you. There will certainly be well over 300, 350 of you joining, and we appreciate your...
We hit 25,000 subscribers yesterday, people.
25,000. We thank you, people all over the world. Paul, I see all of our lovely people, all of our patrons. Yeah, no, I love you. All over the planet, Paul. It's astounding as someone say, I'm in Portugal. I'm in Delaware. What's up, everybody? Paul, today is somewhat of a, I wouldn't call it a somber mood, just an interesting stream in that today is March 23rd. Besides the standard shootings, the normal shootings we're going through in today, unfortunately, in the last couple of days.
Don't bring up shootings.
You're right. It is the 1 year anniversary of what, Paul?
Well, it's actually here saying, what is going on here? It says March 23rd was according to Mo, March 23rd was the low of the S&P. Mm-hmm. It hit 2190.
You were calling for 1,500 back then.
Yeah, I thought we were going to go 1,500, and it didn't. Mm-hmm. Instead, it went to 15,000.
I'm looking at that chart from here. This is the first time I've seen it like zoomed out like that. This is incredible.
Show the chart there a little bit.
Show Paul's chart. This is crazy. I mean, man. Really,
10
it was
years,
a super V.
10 years. I mean, look at this.
Look at that little drop and spike.
This took 30 days.
Yeah.
It was the fastest bear market and recovery in history. Bear market plus recovery in history. Fastest ever.
Remember in the office, it was just CNBC on everybody's computer, TV in the hallway. And then all of a sudden, I mean, it's just 5% a day, 5% a day. It's like, what is happening? It was crazy.
So back then, I was sitting on all cash, Paul, at this time. And I thought I could time the market.
Well, of course you did.
I thought, you know what? When is this going to bottom out? I don't know. But I didn't time the market that well. I still have some cash sitting around. And I'm going through the same thing again. Maybe some of you out there are as well. Is like if you have some cash sitting around or what to do. Maybe you've come to us for some guidance. And it's always, Paul, I'm coming to you for some guidance. I still have some cash. So why wouldn't you say, of course? I mean, what?
Everybody thinks they can time the market.
I mean, you're wiser, but go on about that.
Everybody thinks they can time the market, and they can't. I remember getting really, really lucky 2 days before.
It was 2 days before.
2 days before I sold, or 3 days before, I sold out of an S&P short I had. I went to my brother's office. I said, Mikey, I think I'm going to exit the short we have because this just keeps going down nonstop. It's got to bounce at some point. We'll just rebuy back in because it's on its way to 1,500. I thought this was the start of finally what I'd been talking about. I exited at 23.10 and went down to 21.90, and then it shot right up. I mean, I quote unquote saved myself multiple seven figures since then in losses for that, but it was just complete dumb luck. I mean, guys, I still don't get it. Like, is our economy even bigger than it was a year ago?
You know, the funny part about all that falling down was that the market was crashing like that in prediction that what has happened with the economy and loss of jobs and businesses going under would happen. Then that happened, and we're back at record highs. It's crazy.
It certainly hasn't made much sense. Paul,
Yeah.
I've definitely come to you on the show with like, how does this make sense? And at this time, we've titled shows, especially talking about Tesla and things that these high flyers in the past, Paul, is at what point do valuations don't matter?
Okay, so check this out. This is US GDP, okay? This is US GDP. It is currently at $21.84 trillion. Now remember, the stock market is made up, basically, as Warren Buffett says, the most reliable metric in stock market at any given time is the stock market cap to GDP ratio. Right now, before the crash, I think we hit 33.93. And the stock market, and the US GDP was right here. We're now at 39.50, And GDP is lower than that amount currently. We haven't recovered from last year's numbers yet.
And for 2 years prior to the crash, you were saying how overvalued everything was.
No, for 3 years prior to the crash.
Go on.
3.5 years. Guys, and this is still overvalued. This was still overvalued. This stock market is even crazier than, if you told me a year ago at 2190, Paul, the market's gonna be even crazier in the next year than it was in the past year, I'd have been like, there's no way. And it happened. That just goes to show you that anything can happen, and fundamentals do take a long time. And apart from it being different this time, I have a hard time believing that this is gonna end up being okay, because we have a GDP right now, US economy, lower than it was a year ago, and we have a stock market that is 20% higher than it was a year ago.
Dan is bringing up an interesting topic. What about all that new investor money? I'm certain.
Listen, that can definitely do a good job in terms of giving you short-term results. But eventually what happens is, like, a big part of this fall, guys, was the fact that people were pulling money out like crazy. That's a big reason for the fall. And then all of a sudden we had shutdown, and we're gonna do stimulus, and all the prospects came better and better and better, and blah, blah, blah. Before you know it, money's back up again, and now all the problems in the world are gone. We're fine, even though we have 5 million people dying in the world with COVID. Whatever you wanna do.
We welcome you in. We thank you. It's Paul, does it feel like a weird day? Mo, is it like a boring day in the market? I mean,
I feel like the whole week, well, it's only 2 days, but this week
I think the whole last few months have been boring.
Yeah, they've been pretty boring. I mean, even yesterday I opened up because I do the morning show, and I was going through everything. I'm like, man, there's nothing to talk about. Everything's just kind of boring.
you were actually a couple weeks ago like, I'm kind of sad. I was like, oh,
Yeah.
did your dog die, Mo? And it's like, no, the markets just aren't doing anything.
Yeah,
So
I mean, they're
Well, the love of
overpriced.
his life wasn't reciprocating at the time, but now she's back.
Yeah, true.
she is back, right, Mo?
She's back.
That's great to hear.
Is she watching?
No, she is working. It is. It's very hard to sell puts right now. It's hard to do a lot of things with options right now, as we've been finding out. So Monday was the day that Paul and I were going to rewrite our options, our puts, and I did not write one put.
Oh, I wrote a few puts.
Couldn't find any.
Well, the other thing is
that Biogen one was
garbage.
Garbage, yeah.
I got my Steelcase shares taken away from me because of my call on Friday. So I rewrote at the same strike price a put to make about 80 cents per share on that one. So then if I get assigned them, I'm actually going to my base is actually going to be lower if the stock falls. So I'm pretty happy about that.
Yeah.
Rui says, how do you invest in the S&P knowing it's going to fall hard? Why not wait a year or so, Paul? This is the timing versus time in, right?
Well, yes, correct. Your job as a long-term saver, saving for retirement, is to not think about timing the market. You just buy every single month the same amount, the same strategy, and over a 30 or 40 year period, after a 30 or 40 year period, this is what's going to happen. You're going to have an S&P, SPX, S&P 500 that's going to look like this over 40 years. And in this time, we had lots of bubbles and falls and collapses and everything, and guess what? It just kept going up. Your job is to not worry about these small blips, do it all the way up. I have 10 businesses, I have a lot of real estate, I have multiple ways of making money, so it's okay for me to try to time the market. And I have a very thorough understanding of, if I'm wrong on it, if the market goes up and up, I don't look at it going, oh my God, I'm losing out on so much money. I just look at it and go, okay, well, it's gonna eventually pay. So I have that discipline. I'm not saying you don't. That discipline took years and years and years for me to get established. So these are the things that as an investor, as a saver for retirement, you need to make sure you're just buying every single month the same amount, and 30 years from now, you're gonna wake up and go, wow, I'm a lot wealthier than I was back then.
Mo and I had lunch yesterday, and we were talking about I'd love to hear your thoughts right off the top of your head, Paul. It's like, what are the pillars of what you're trying to say? I mean, to break it all the way back down to like very basic. Like if you had to describe your thought process of value investing, this channel, and what we've been teaching for almost 350 videos over a couple years, just like what is it? What are the core values?
This channel. We started this channel mainly to tell people, hey, if you want to learn how to look at a company individually and see what's a good buy out there, that's what you come here for. Now, we also tell people, if you're saving for retirement, you do this, you do that. It's all about regular everything money having to do with money, right? But I guess my biggest thing is $1 of profit is $1 of profit no matter what you do, no matter what the business is. Now, different businesses at different stages in their life can make $1, $2 in profit a lot faster. There's a value perspective here we have to apply. I'm sitting here saying that the best company at a really high price is not a good buy. We're trying to teach people that $1 of profit, I don't care what's behind it, it's still $1 of profit. It's still $1 coming. You've always heard cash is king. So, but yet nobody ever does that when it comes to investing. They look at hype. We're trying to sit there and say, guys, $1 of cash in your pocket today and tomorrow and for the rest of your life is worth something. What's that worth? That's what we're trying to teach and understand. It all depends on what that prospect is for the future. Value investing is about what you're buying right now relative to the past and what the future looks like. The problem is the future is completely unknown. My chart on the S&P, if you think for a second that anybody along these marks right here would have gotten the next 5 years right, you're out of your mind. Anybody, consistently.
Yeah.
What's so funny, Mo?
You're right. That's what I'm just laughing at what you're saying.
I mean, this is impossible to guess this stuff. Now, if you look at Warren Buffett, for example, considered the best investor of all time, he's been doing terrible for the last 10 years. And guess what? Every major bull market, they say Warren Buffett's dead, value investing is dead. And eventually comes back. Why? Because all of a sudden valuations do matter, and they matter with a vengeance. And we're trying to teach people, hey, I want you to care about hype, but I want you to remember all the time that $1 of profit is still $1 of profit. I don't care what company it's behind, it's still $1 of profit. Now, if that company can grow to 5, and another company has $1 of profit that can go to 2, which one are you willing to pay more for? All things equal. Of course this one. That's when growth matters. But growth doesn't matter because you look at a chart and a fundamental basis and say, well, the chart's going up a lot, so therefore, but that's what we get stuck with is hype.
Yeah, I think we were talking about today, we were looking at some companies that are coming out in the next couple of days. We looked at Plug Power, we looked at Nautilus, we looked at Beyond Meat. You know, I brought up ideas with Plug, Paul, is they're expecting in 3 years from now for this grand revenue of billions and billions of dollars. And a lot of the other channels that I've shown you basically say, as you buy on this upswing, look at their projected. You know, that's what you're missing with all this, Paul.
Then those people are mixing fundamentals with momentum. I'm all in favor of momentum. I'm all in favor of chart trading. I'm not in favor of mixing everything together. Now, you can use chart trading as a way, and momentum as a way of entry and exit, as I talked to my friend yesterday about, my friend Michael Moskal, who I'm trying to get to go on the show, but he's not answering. He's probably doing yoga. But I'm sitting there saying, like, you can buy a good company at a bad price, and you can buy a bad company at a good price. People always forget that, but yet people become geniuses when it comes to buying a car. They're gonna sit there and do hours and hours of research to find the exact Ford Taurus they can buy for $1,000 less than their neighbor. But then when they look at stocks, they're gonna sit there and say, well, yeah, but the Ford Taurus is super popular, so you gotta buy a ton of it. Okay, well, what's the difference? Why are you not doing that? Well, because it doesn't make sense. But yet, when it comes to stocks, we always look at ticker symbols and not actually looking at the fundamentals of the company. I just want to teach that there's always a question of how much. And there's always a right answer for that how much. Usually the market's wrong about that answer. Usually it's either too high or too low. Be the person who makes money when it's too low. That's what I want you to do.
Guys, if you have questions out there, obviously we appreciate you watching. Make sure you fondle the thumbs up. I definitely have some new, Paul, I have some new and exciting sound effects I'm going to be spoiling to our listeners here. You guys have been calling for it, and we're going to get after it. Would you like to look at some requests, Paul, for some 8-pillar stocks?
Sure, but can I show you guys something on the 8 pillars first?
Please do.
Guys, by the way, we did a video of this today. This is Nautilus, an 8-pillar company, and guess what? I don't want to buy it. It's all 8 pillars, I don't want to buy it. That just shows, and it's even a magic formula investment company, because their return on assets are huge, and their PE is very low. I'm not buying it from a value perspective because I don't like the future prospects of it.
So stay tuned for that Nautilus video where Paul just told you everything about it.
But people still want to watch it and hear our analysis of it.
That is true. It was an interesting video with the 8 pillars and a little book that beats the market.
So for those of you who don't know, this is our Everything Money software. If you're a Patreon, patreon.com/everythingmoney for $17 a month, you get the software. Look at this, guys. I talked about this a few months back, and it's almost done.
What is this little guy?
8-pillar portfolio, guys. What this is going to let you do is go in here, add up to 50 companies, and it's going to look at all 50 companies, either 5 companies or 50, whatever number you want between 1 and 50, as a combined total and say, if you bought all of these companies, how would your portfolio look? Would it be 8 pillars, 7 pillars, 6 pillars? That way you can see how your total package of companies looks as a package. You'll be able to save your portfolios for the future. So for example, if you have an IRA and you have your regular brokerage account, you can have different portfolios in there. At some point in the future, I'll also change the weight of each one, so that way you can change it. If you have more of one stock versus another, you can alter that. And it'll show you exactly the 8 pillars for your entire portfolio of companies. If you have an ETF, the entire 8 pillars for the entire ETF.
Check, please.
Incredible.
Please tell me that's not awesome.
I spoiled this just a little bit ago. My son, of course, Geo, the famous Geo trader, got off the bus, and I told him we now have access to Everything Money. I have the inside access to Everything Money, and of course, while he starts typing in all of his stocks and looking through companies, you can do this if you're incredibly young. Paul, we're definitely going to be doing something with Everything Money Kids in terms of teaching kids. We brought up ideas of like little summer camps for the kids to get them. I think I talked to some people, Paul, and I think the most rewarding thing, literally, you've told me in the past few years, coupled with this discipline, is really the compounding interest calculator does so much in my life. Beth and I lived with a lot of weight on our shoulders that we weren't doing the right thing, Paul. We weren't saving enough, because you hear all the articles. Nobody's saving. Millennials certainly aren't saving. No one's saving. A lot of people dying with very little money to them. You're not going to have enough. There's no Social Security. It's all this fear. And Beth and I were buying into it. I mean, almost fighting about it. The idea that we got to save more.
And all it takes is a simple calculation to see if you have enough. And guess what?
What is that?
That's that calculation there. Guys, this is the 8-pillar main page. This is the only one available right now. April 15th, everybody who's a patron will get access to it. FYI, my goal is to have 725 users by the end of the year. We have 1,628 as of right now. Please go sign up right now. It's only $17 a month. It's insanely awesome. Here are the other things we're creating. Real estate calculator, loan calculator. This chart trading is for all the Mo's muscles. Momentum trading is for all the Mo's, not Mo's muscles, the Bid and Ask Nation. You can still get it as a lower tier person. You have to pay a little bit more money. But the whole point is, guys, I'm building this. I just got off the phone with our software provider today. I literally think that our software is going to be 10 times more than I paid today at some point here in the next 2 years.
We're talking like many tens of thousands of dollars.
Tens of thousands of dollars a month.
A month?
A month.
Who's going to pay for all this, Paul?
I'm going to pay for it.
Okay.
Because all the awesome people. The whole point is I'm trying to make this a really good software with Discord. It's awesome. I can't speak enough about how amazing it is. And the people who are signing up now are doing a brilliant thing, because guess what? At some point in the future, when it's $49 a month, they're going to be like, thank God I signed up at $17. There are people who signed up at $8 a month. I don't even know if I'm going to make money off them. I don't care. Like, our software costs are so high, it probably won't even make money. I don't care, because they support us early. So this is great.
My dad's in.
Your dad's in this chat?
Yeah.
Where's your dad?
Come on.
He's asking how did Tesla get to be worth more than the big
That's
three
a great
car
question,
companies in the
Paul.
United States?
Ask it again, Mo.
He said, how did Tesla become worth more than the big three in the U.S.?
Hype.
Yeah.
Hype, Dr. Hussein, hype. That's all it is. That's all that does. Anything that's irrational, guys, on the high and low is all because of hype. You gotta remember, there's just as much hype here as there is here. When stocks are selling irrationally low, and you guys look at me and go, Paul, you keep saying stocks are a good buy, but they don't go up. Yes, I know. And then all of a sudden, another bull market will start. Because eventually a bull market ends, a bear market starts, a bear market ends, a bull market starts. It eventually happens. We don't have a bear market forever. We don't have a bull market forever. And at that point, all the buys you made will just start compounding like that. It'll be incredible. And you're going to make tons of money, and you're going to feel so awesome about yourself.
And I'm surprised you didn't change your tone on Tesla after Kathy Wood's most recent. You're smiling. Mo.
Is it Kathy Woods or Kathy Wood?
It's Wood.
Kathy
W-O-W, yeah.
I'm surprised she didn't sway your thought process about it being a gajillion dollars.
You know what I was telling you? Or I think that what she put up there, what did she say? It was going to be $5,000 a share?
I thought 3,000.
3,000 a share.
So I think it should be worth more, because her valuation did not include their solar panel company, their renewable energy stuff, didn't include their Bitcoin investment, and all of those are the best ever,
So
especially
yesterday-
Bitcoin. So
By the way,
I think it should be
thanks-
like $7,000 a share.
Yesterday I went to lunch with my good friend Michael, and we talked about this, and I asked him a question. I said, Michael, this is what I keep asking people. Name me one stock portfolio manager from 97 to 2002 who was all about the hype, who is prevalent, who's noticeable today, a notable investor today. He goes, oh my God, that's a really good exercise. I'm like, yeah, I know. And he goes, yeah, I don't know of a single one. Kathy Wood, with this hype, my guess is that at some point in the next 5 or 10 years, we will not be discussing her anymore, except for it hopefully will be memes saying, here's another hype stock, and here's Kathy Wood saying it should go to 3,000, and it'll be at 0.30, it'll be at 30 cents or something like that. It's just, This is a very common thing. Now, have I been wrong the last 4 or 5 years? Sure. But she believes that Tesla will be a $3 trillion company. This would be the biggest company by far in the entire world, and they don't even sell $30 billion. They sell $33 billion a year right now. And this is by 2025, she says it's going to happen. So the average car company right now is selling for 0.6 or so times revenue. So for a $3 trillion company, it basically needs to do $5 trillion in revenue. Can anybody name a company that even does $1 trillion in revenue today? How many cars have to sell a year to sell $5 trillion a year?
She was predicting that they are going to be selling 25 million cars a year by 2024.
Great. What's 5 trillion? What's their average?
I know it doesn't make sense.
What's their average car price?
Call it 50.
50?
Let's go higher. Let's say they only sell $80,000 cars.
If you ask me to do this math, the
So
show's going to
cross out 4, cross out 4. What is 500 million divided by 8?
Oh, Lord, help me.
46 million. No, sorry,
62.5.
Guys, 62.5 million cars based on $80,000 sale price.
And 80,000 is not the. I mean, that's
that is
high.
what her assumption is to get $5 trillion in revenue.
They need to sell 62 million cars.
62.5 million cars a year at $80,000 each.
They currently sell 500,000 cars a year.
I don't care. Forget about that. Name me one car company who sells even half of this a year.
None.
At even half this price.
None.
It doesn't exist.
It does not exist. It is literally impossible.
It's impossible.
Now, you're going to sit there and say, but Paul, it's about the technology. If their technology is so awesome and so efficient, why do their margins suck? Their margins are just like 22, 23%. Microsoft has bigger margins. Apple has bigger margins. Google has bigger margins. If it's their technology, where are the margins?
Yeah.
The gross margins are not there.
How many Teslas do we need to give away to get there, Paul?
We're giving away at least 2 Teslas en route to a lot. We're giving away 2 Teslas. If you're a Patreon member, you automatically get entered.
Now, I would say it's exciting hitting that 25K because we're halfway home to that 50K, Paul.
We are.
And boy, whoever wins a Tesla, if you're in the States, we'd love to get you up here. We'll go pick out the dang car ourselves. We'll get the color. We'll make it a whole day of it. And we'll probably have dinner on Paul, wouldn't you say?
Oh, of course. Absolutely.
Mandy had a nice, interesting comment here, and I just Mo, did you see it?
I didn't see it.
Darn it. Mandy said that Sven Carlin did a Tesla video today in his response to Kathy Woods.
Oh, wow. What did he say?
It's hilarious. Great detail on valuation. And I found out, I thought you thought that Sven was...
No, I like Sven.
He's good.
Yeah, I'm liking him too.
Yeah, I like him. He claims to be the largest value investing YouTube channel, which from what I see, he is right. He has like 150,000 subscribers. He's got an accent. It's a little bit hard to understand at times, but yeah, I think he's a very smart man.
Let it out, Paul. Let the hate flow through you, Jake, with the Star Wars reference.
Listen, as people didn't say, like Simon here is saying, math just dictates it. Like, guys, at the end of the day, it's just math. That's all investing is math. You have to sit there and say, okay, if I expect to make $1 every single year for the rest of my life, how much is that dollar worth to me today? If I expect $1 to increase by $1 every single year the rest of my life, how much is that worth today? If you pay whatever amount you pay for it, I will calculate for you your return. That's all investing is math. It's the present value of all the future money you're going to get. All the future money. That's all it is. So but then when it comes to a company, looking at a company, when you put a value to it, at the end of the day, every company in history goes back to reasonable valuation metrics that make sense over time. So to go to Tesla and say, if they're such a brilliant company, if they're the most amazing company of all time.
Oh boy, you're actually going to pull this up.
I'm going to pull this up. Why is their gross margin 21% then? Their gross margin is 21%. The other auto industry is like 15 to 20%. Toyota might be even higher than that. I don't know. But for being so amazing at making cars, they don't do a good job of making money per car. And that's with the government writing them a check for how much money every single time they sell a car, which is going away now.
I would say it's also interesting that at the moment, most of the electricity that drives these cars, also those checks go to Tesla as well. So meaning, yeah, I don't pay a gas station ever.
That's right, you pay Tesla.
I pay Tesla automatically. And they make it feel like it's cheap, but there are times when I'm humming down to Columbus and I fill up and it's $8, $10, $12 sometimes.
And that'll go up, by the way. As electric vehicles become more and more popular, electric costs will go up and up. And as the world uses more electricity versus gas, guess what's going to happen to electric prices?
Mo's dad completely derailed the entire stream with Tesla. Yeah, Paul, you are adamant about this. I mean, Yeah, it's crazy.
Look what Nick wrote.
I don't think people even factor
Not
in.
Krasinski. Nick Peppers wrote, Paul pulls up Tesla, everything
way.
money software breaks. I should just have it where every time you look up Tesla, it just says, don't buy this. Just don't buy this.
I blame Mo Senior for hijacking the episode.
I think it's funny though, like regardless of financials, I mean, Tesla's like the electric company out there now. They're
Electric
gonna
vehicle company.
they're gonna have more. I mean, GM is coming out with cars. Audi already has car on the road. Apple's gonna do something big in the market. You know,
They already announced that.
We're not even talking about the competition that's gonna be coming out to take on Tesla.
You guys gotta remember, one of the big things in value investing that value investors talk about, if you read any value investing book, they'll talk about it. The better the margins in a business are, the more excitement in it, the more competitors enter.
Yeah.
That's it. That's why Warren Buffett talks about a moat. What's the moat for Tesla? What makes Tesla so unique that people can't enter the market? There is no moat for Tesla. There are literally dozens of car makers out there currently working on their electric vehicles. Does that mean Tesla can't do well? No, but even if Tesla crushes all of them and becomes the sole maker of electric vehicles in the world, I don't see how they sell 62.5 million cars a year at $80,000 a piece. I just don't see how that happens. That's the big thing that I'm trying to get past is investing is just about understanding basics of numbers. Is this a reasonable assumption? No. Okay, well then, it's like sitting there saying, I'm gonna start a company selling computers and we're gonna sell 2 billion computers a year. Paul, the entire market is 100 million computers a year. Yeah, but we're gonna sell 20, I mean, it doesn't make sense. At some point, you gotta sit there and say, what makes this even reasonably possible?
Yeah, Michael's saying they're not just EVs. Michael, I don't know anyone who has. Mo, do you know anyone who has anything besides Tesla? I mean, they have the roofs, they have the batteries. I just don't know. Maybe I'm crazy. I mean, of the three of us in this room, has anyone met anything besides the Tesla car?
No,
Everyone keeps saying this.
I've seen the Audi car out there, whatever that is, but I don't know.
The electric vehicle one?
Yeah, and I saw a Mustang, one of the new Mustangs, electric Mustangs, the other day on my way to
I'm
camp.
talking about specifically Tesla. Is that?
Can I tell you something?
Do I know somebody else
Do you
that
know
has
what
a Tesla?
No. Anything besides just the car.
He's talking about like the solar panels or something like that.
Oh no.
By the way, solar panels is a brilliant idea.
Yeah.
Yeah.
So the other thing is this though. Seth's been trying to get me to buy a Tesla for a long time. It's a nice car. But I would rather buy from a car maker, a car manufacturer. And by the way, for $85,000, I can buy the Porsche Taycan. And I like that car. To me, I'm like, why would I buy a Tesla, which they've had manufacturing problems. They're just the one car, where I could buy a car from a company that's been around for 100 years that I know is gonna be around, and if there's an issue, they're gonna fix it. That's to me what I get about that doesn't mean Tesla can't become this amazing company, but even Elon Musk has admitted, Seth, you said your car was built in a parking lot under tents.
Yes.
They had manufacturing problems. Like, why would I want to buy?
Well, in contrast to that, they're saying that they didn't have those with the Y, and actually there were no stories of the Y coming out. The Y looks like a great car, but
the SUV.
I see those a lot of places.
Yeah, they're around. I mean,
Yeah.
the charging stations are starting to fill up.
Yeah.
With that said, Paul, would you like to look at a company like Porsche? We've had some requests for Porsche.
I think it's Volkswagen. Isn't it owned by Volkswagen? Volkswagen?
The Volkswagen. No, I thought Porsche had its own ticker, but maybe
Porsche Automobile Holdings.
Kathy Woods was ripping on
Here we go.
VW this
That's not
morning.
right. What was she ripping on?
VW, Volkswagen.
Oh, maybe it is VW. People are telling me in the chats.
She was saying that their EV technology compares nothing to Tesla. After, of course, she gave that crazy.
But what EV technology do they have it doesn't compare? What's the technology
this
that's so
is coming
amazing?
from Kathy Wood, so.
But that's what I'm trying to ask.
I don't know.
By the way, she very well could be right, but I still sit there and go, does that make Tesla a $3 trillion company? The math itself does not work.
Do you think if you drove one, the two of yous,
I've driven
for I'm talking for like months, like
it doesn't change the numbers though, Seth.
But even today, the software inside the car,
I agree.
It's like it's like the most elaborate game versus an Atari.
As far as technology goes, I think that Tesla is the absolute best car on the road as far as tech goes.
Can they
Nothing
sell
compares.
62.5 million cars a year at $80,000 a piece?
The only car that I think even compares to Tesla is a Range Rover, and it's not even in the same ballpark.
Yeah, our Range Rover computer is not like the Tesla.
No.
But again, like I just don't.
I mean,
Someone's saying Audi has
right.
self-driving coming out. I mean, I guess it's not something that's completely unheard of in another car.
Who does?
Guys,
Audi.
18 years ago, my friends in college were working on self-driving cars at Google. It's been a thing that's been going on for a long time. Now, Tesla's done it very well. I'm very impressed with that. But again, I go back to 62.5 million cars a year at $80,000 each.
That would get that valuation.
That would get probably close to the $3 trillion value. Is this likely? If you believe this is likely, if you think this is likely, I need you to go outside your Tesla.
Uh-oh.
Oh boy.
I need you to take the electric prods. I need you to rip the top off. I want you to stand in water and just zap yourself.
Not the bang your head in the car door.
No, I already did that one before, so I want to go a little dramatic with the electric. I want to keep the theme of electric vehicles.
You know, you gave that analogy of banging your head, and then you didn't hear about that lady in Columbus that passed away. Did you hear about that?
There's a lot of people in Columbus who probably passed away in the last few months.
Like, you got to hear this. If you haven't heard this, I mean, I'm very sad for her family. But of all the things that could happen, Paul, she was paying for parking right where I've gone a zillion times, and she dropped her ticket out of her car door. So she opened her door and put her head out to bend down and get the ticket, and then stepped on the gas, and the door.
Oh, jeez.
And it slammed her head in the car door and killed her, unfortunately.
Lord.
I said, imagine if that was your life that just happened. That stuff scares me. I don't know why I'm going off on a tangent, but you always bring up that thing, and that's what I think of. Isn't that a great story?
Mwah, mwah, mwah.
Make sure you smash the like, tickle, and follow that like button as we talk about people dying. What else, Paul?
It's like,
So someone's saying Cybertruck is a fail. Let's get back about arguing about Tesla. I mean, what happened with that truck? Everything was wonderful.
I don't know, but that truck is so hideous.
You're right. I had friends put a down payment on this, and then just I got a new Crickets, Paul.
Paul, what did
new Crickets?
I can't hear it.
Paul? What did you put on? What
the
down
Tesla
payment
truck?
did you put on? Was that a Neo truck or what?
Oh, Nikola.
Nicola.
No,
Nicola.
Was it?
It was Nicola.
Yeah.
Yeah.
I got my money back.
Did you?
Yeah, because they're like, yeah, it's not going to happen. Remember they lost their deal with GM?
That's right. That's
They're
right.
like, okay, you're going to get your money back.
That's right.
Henry said, Henry, I love you. Hey, guys, love the videos. Just want to ask. This is interesting. I'm a 19-year-old university student who's really interested in value investing. Been watching Gary and ourselves.
Oh, good.
Oh, you're watching Gary. Good.
I talked to Nicole, which is our assistant for photography, and she said, listen, do you save for retirement? No, I'd love to. I said, why don't you make your goal
Well, don't say I'd
1,000
love to. Just do it.
Right. I mean, the goal, I'm like, I showed her what $1,000 could turn into in 57 years from now. And it's astonishing.
She has that time.
Yeah, she does. So, people are thanking me for the new Crickets. Yes, you're welcome, Tim. You'll appear. I got you there. So yeah, I did like the Cybertruck, but I don't know where that thing went.
You liked it?
I mean,
I didn't like it.
it grew on me.
I was really looking forward to
You're just
Tesla.
a Tesla fanboy.
Yeah.
I am.
I was
am.
looking
If
forward
that
to
was anything else, you'd been like, that's the ugliest thing I've ever seen in my entire life.
Well, because I know how it's going to drive.
I was
know.
really looking forward to them coming out with a real pickup truck. And then they came out with that spaceship thing.
Which they were
then
like,
they throw
by the way,
rocks at the
yeah, they're
windows
like,
and
hey,
they
it's bulletproof. Oh, what did he say? He's like, that's going to cost us or something like that.
He let out some expletives. So maybe you guys could invite Gary or Sven on the show.
I'd love to have both of them on the show. Yeah, that'd be fun.
Gary sent us an awesome book the other day on bank analysis. So I buy it. I get it on Saturday. I read 2 pages and I'm like, I'm not reading this.
I started reading it yesterday and I'm like, this is awful.
He texted me, he goes, Mo, I'm assigning you this book. And I was like, yeah, I'm not reading that. I'd rather stare at a wall and watch
So I
paint dry.
emailed Gary. I go, Gary, this book makes security analysis seem like a legal thriller. He goes, hey, I warned you. I told you. I was like, good Lord, that was it's a terrible book.
Yeah.
Do you
So
think
boring.
before I start bringing up more dead people stories that maybe we could talk about a company, or what do you want to do, Paul? I mean, I guess what if, summarization is in the past year, what have you learned about the market and what's going on in the world?
It can be even more irrational than I thought. We have an economy that went to 18% unemployment. GDP dropped 30-some%. It still hasn't recovered, and we're sitting there saying the market's worth 20% more when it's already overvalued. It's one thing if it's undervalued, but it's already overvalued, and now it's valued at 20% higher. Guys, every value investor, I mean, like I just talked about Gary. Gary, when I first met him, the market was in the low 2000s a few years ago. He was like, listen, it's very difficult to find good deals here. The market's a little, a little expensive, right? Now, talking to him on the phone, he's like, this is just crazy. He's like, this is absolutely a bubble. Something's gonna happen at some point. There he is right there. Go to Mo's page.
I'm gonna put it in the chat.
And people are asking for Gary on the show. Stat, Paul. We got to get this done.
Should we get Gary on the show? I mean, I got to fly him in from Boston.
Yeah, it'd be fun. Except I think he's
Gary's a chess player now. We've been playing. What was that?
I think he's a little afraid of the plague, though.
Is he afraid of the
I
plague?
don't know if he'll travel.
He's afraid of the plague?
Do you want to look
Maybe
at?
he got the vaccine.
Do you want to look at Porsche? I was going to bring up
No.
Rolls Royce. We talked about Rolls Royce a few days ago. You don't want to look at that either.
Well, because Porsche is a Volkswagen,
Yeah.
right?
Okay, got it.
I mean, do you want to do that?
People are asking, but I mean, yeah, people are asking for Volkswagen. Do you want to look at it?
All right, let's look at it.
What's the ticker?
Okay.
I don't have a data feed for international companies yet, so this will be
The ticker
on
is
Y charts.
VWAGY. Is that correct? Volkswagen Group, internationally known Volkswagen, German multinational automotive manufacturing corporation in Wolfsburg.
So I want to make some
Germany.
comments here.
Please do.
Look at their gross margin, 17.5%. Tesla was 21%. But Tesla gets a big rebate every year. That's a big chunk of the 21%. That accounts for about 6%. You take that out, Tesla is actually lower than Volkswagen's gross margin. That means that every unit they sell, Tesla makes less money as a percentage of the revenue than Volkswagen. So Tesla, this brilliant company, amazing technology, everything, they can't make more than even Volkswagen. Your daughter who has a Jetta, Volkswagen made more money on you and your daughter than Tesla makes on the daddy's Tesla, whatever it is, right? It's just, I don't get that. People talk about these margins, bottom line margin, double. 4.6 versus 2.2. They pay a dividend. Oh, and by the way, revenue, 230 billion versus 32 billion from Tesla, which includes other revenue from other things besides the cars. PE ratio is really high here, 40. That's an X. The margin is an X, and we will be changing these two things here soon, but so far 2 X's to go. No, 1 X and 2 X's to start.
Yeah, 2 X's. Let's go to what is their revenue growth over the past 5 years, Paul?
All right, so here's the reason why I don't like Y charts. They won't give me 2012 yet.
2012 or 20, you mean?
Sorry, 2020 yet. Let's just go. They did about 230 billion last year. So they are a check still. I mean, let's go to 2019 numbers. It's still a check mark there. So remember, guys, these are 2015 and 19 numbers. They don't have 2020 in there yet for some reason. Profit growth, check mark, negative 1.5 billion to a profit of 15.5 billion. And this was probably the year of their big emissions scandal. What was that? What was their emissions thing?
I don't recall.
Remember they had like
they were with their diesels. It was them and, well, they own Audi, I guess, or whatever. But they were lying about their emissions in the diesels, and they were actually not clean for the earth and all this.
And they're back.
Stuff. Yeah, they're back, baby.
$5 billion in share, 5 billion shares versus 5 billion shares. It's a check mark because it stayed the same. Shares outstanding, stay the same.
Nice.
Balance sheet.
Current assets over current liabilities is pillar number 6.
240 billion versus 214, check mark there.
Nice.
Cash flow.
Free cash flow growth. Oh,
So
boy.
we're back to Y charts. Remember on our free cash flow number, on our software, it tells you the number right below, so you have to do the math. But Seth, you ready?
Unfortunately, I am.
Negative 5 billion to negative 1.6 billion. So it's a check mark, but they're all negative numbers.
So no free cash flow.
There hasn't been free cash flow in this company. I'm avoiding. How do they
like
not
that.
have free cash flow?
Oh my gosh.
I remember this now. They have no free cash flow.
This is weird.
Yeah. So one of the things you guys might want to check out, capital expenditures can be split up into 2 different kind of expenditures. Growth and maintenance. Now when I say growth and maintenance, not all companies split these up. You want to take this number out of capital expenditures, the growth part. As an example, if you have an apartment building and you are putting capital expenditures in there, a maintenance one would be a roof. Something that doesn't actually add money, add revenue to the property. Growth would be rehabbing a kitchen or bathroom that's going to increase your rents. That one should not be penalized in the capital expenditure number. Not all companies split this apart. In fact, most companies do not. But this is something important to know whenever you're looking at capital expenditures. I'd be interested to find out how much of these capital expenditures were for new factories to build better cars. Now, granted, all these years having huge numbers, I have a hard time believing they're building factories every single year, but this is already an X on price of free cash flow because it's negative over the last 5 years. So I can't even come up with a free cash flow number.
Trader Mo?
Sure.
Trading aspect on
So this is
Volkswagen.
foreign. I don't do foreign companies. I never trade foreign companies. I never will trade foreign companies. But if you want to trade a foreign company like this one, they've gotten a big influx of volume the past week or so. I don't know what's happening. But what you need to do, I mean, they ran up, wait, hold on, this is white. Okay, they ran up really high up here, above, almost $50 a share recently. So if you do anything with this, you need to get green engulfing candlesticks moving up like this. At least break out above this 42, 43 area. You need to get over top of where, let's see, what's this? Probably last Wednesday. See where last Wednesday's price closed. You need to break out above that before you do anything in this. But again, there's so many US companies, I don't know why anybody would go and trade foreign.
So, Paul, it's a no-go on Volkswagen, huh?
Bye-bye.
That's our take. All right, guys, make sure you're tickling the thumbs up. You're going to like this because I got that now. Oh, my God. So when we're tickling Paul's belly, I got a new sound effect for you, Paul. It's great. A lot of people are asking for BWY, Paul.
BMY.
Thank you so much. BMY, Bowel Movement Yearly. It's the magazine. No, what company is this, Paul?
Bristol-Myers Squibb.
What do they do?
They're a drug company.
Mo, what do you know about these people?
I know a lot about them.
Well, tell me, because I don't know anything.
They make a lot of cancer drugs. They're a great company. They're very big. They just acquired Celgene pretty recently. And yeah, let's see.
All right, so guys, this is a $140 billion company. They lost $9 billion last year. More on that later. So they have no PE, that's an X, and their profit margin is negative, that's an X. Another reason why we're getting rid of profit margin. But here's the interesting part, guys. This is why you guys are smart for learning from us. $9 billion loss, but look at their free cash flow. $13.3 billion to the positive. So this tells me there was some major write-off here. There was something major that happened.
Matthias saying bad profit because of acquisitions.
Nope. Acquisitions don't cost. When you make an acquisition in a year, that doesn't go against your income statement. That goes against your cash flow investing part of your cash flow statement. Now, what it could be is a write-off of an acquisition in the past. That's probably the more likely situation. They made some acquisition, maybe for $30 billion. They go, oh shoot, we paid $20 billion too much. They write off $20 billion. But an acquisition in and of itself does not hit the income statement until there's an impairment charge, which means they sat there and said, oops, we made a mistake. We got to write this off.
Neil is saying that Warren Buffett likes this company, so let's keep going.
Does he? That's weird, because you know why?
Go on.
Look at their return on invested capital over the last 5 years, 0.9%.
Is that good or bad, Paul?
That's not good. That means when they take their capital and get a return of 0.9% on their money, which is not even enough to pay the debt. So now, based on this $9 billion loss, though, if there's a few write-offs in the way, that could affect this 5-year return on invested capital. There's a lot coming to you guys. But here's the cool thing. 2.9% dividend. Their dividends are 4.14. Their 5-year average is 6.45. Okay, so they're eating up 2/3 of their free cash flow just paying the dividend. Okay, so it's a lot of it. From a momentum perspective, the company is currently above all of its major moving day averages, 25, 50, 100, 200, and 300. That's pretty big stuff. So right now, the things I want to look at, oh wow, look at the return on assets, negative 7%.
That sounds bad.
That's really bad. But again, that's because they lost money last year. You can't really look at that. I should put a 5-year return on assets and a 5-year return on equity and not focus on such low amounts. I mean, look at this book value growth. These are really good, guys. The book value growth of 28 point. In fact, Warren Buffett always reports his book value growth. When you go to his annual report, he talks about the growth of Berkshire. He talks about the growth in the book value. That's what he reports as his returns. 28.6, 13.9. So that tells me that this number is probably skewed off of last year's and other years' returns based on some sort of write-off.
Again, we're looking at Bristol-Myers Squibb. This is a pharmaceutical company out of New York. They have several therapeutic drugs: cancer, HIV and AIDS, cardiovascular, diabetes, hepatitis, which Paul has, and arthritis.
You know, it's funny because it's such a random disease. I think the only person I've ever heard of hepatitis was Pamela Anderson.
Yeah.
All right, so revenue, guys.
Revenue growth is pillar number 3, baby.
17.7 to 42. Check mark. Look at this big jump from 25 to 42. That's probably the Celgene acquisition that Mosafine was talking about.
Yeesh.
Net income.
Billion.
Profit growth, pillar number 4.
So it's actually an X because of that big write-off. So let's see what the big write-off was. Right here. Right here. 7.63 billion. So even without that, they still would have had a big loss. Oh, special income and charges. Boom. Look at that.
Mo, are you seeing this? Someone's name on the chat is Everything Money Fan. Love you, Mo.
Yeah, my biggest fan.
Spelled incorrectly.
It is spelled incorrectly, but that's okay.
Okay.
That's all that counts.
That's great. Okay, well, I cut you off from profit growth. It was bad, huh?
Oh, shoot. I was looking at the comments. So look at this, guys. Everything Money Software. But look at this. We found the culprit in last year. So they reported a $9 billion loss. They had other income and expenses of negative 7.6 billion, 10.7 billion of special income and charges. So part of your job is to go to the 10K or Google, what are these special, because I'm sure when they reported earnings here, you better believe they didn't gloss over this. They had a reason for this. Look at the other years. 300 million, 93 million, 250 gain, $400 million gain, and all of a sudden $11 billion loss. There's your culprit right there. That's awesome. I'm glad to see that. We just have to figure out what it is, because what this is will tell us more about how the company operates. Like, I want to make sure that these aren't, like the last time they even had $1 billion write-off was 2012. They had $2 billion. That's a good thing. It means that when they are writing things off, it's not a very common thing. They have some gains in here. So it's looking at like, okay, over the last few years, it's fine, big number. So that's why this is interesting to me already.
So for Bristol-Myers, it's only one check revenue growth out of 4. We're at three X's, but
this is what I like about our process. I'm not worried about Bristol-Myers yet. I'm not like, oh my God, avoid. I'm like, okay, they have the explanation as to why they have X's and everything else.
let me chime in. Our Patreon fireside chat is Friday, April 16th in the evening, 6 p.m. Eastern. For you patrons, we'll see you there at Paul's mansion. And of course, Paul, we are giving away the 2 Teslas this year. We're halfway home to reaching our 50,000 subscriber goal, and we'll be giving a Tesla away. If you're a patron, you're automatically in that contest. And there's so few patrons that one of you is going to win, I assume. So that's amazing. Paul, let's get back to it. Bristol-Myers, let's look at shares outstanding, which is pillar number 5.
Shares outstanding 1.67 to 2.25. That's an X.
Uh-oh.
There's a big jump in the last year, so I'm assuming they issued shares to make their acquisition of Celgene. Somebody can probably verify that for me, but they even the year before that, they increased their shares a lot, so not a huge fan of that, but they were decreasing. They were kind of stable before then. Look at this. All the way back to 2012. 1.69 to 1.63. Okay, so it's still an X. But again, I'm not that concerned about it right now.
Current assets over current liabilities is pillar number 6.
34 billion versus 20.4 billion. Chickadee check there. Plenty of cash on hand. Free cash flow, guys. Look at this. Uncle Paul. Uncle freaking Paul. Uncle Paul.
You basically made this line to take me out of the show.
Correct. Cash from operations less capital expenditures. I just make it easy for you. I added free cash flow here with the 5-year average right next to it. 2.5 billion to 13.3. And look at their acquisitions right here, guys. They did a $13 billion acquisition last year. They spent $13 billion, and they spent $25 billion in 2019. So they did issue shares both those years, and you see it appearing on their acquisition section. The thing I do different than Y charts, I do acquisition and divestitures as separate lines. That's the cool thing I do. That way you don't just see the net. You see, okay, they spent $13 billion acquiring and they sold $870 million worth. I like that. God, this is such a great website.
You're very proud.
What's the market cap?
I didn't write it. Oh, 140 bill.
140. Their average over the last 5 years is 6.5 billion, which equals 23?
21.5.
Gosh darn it. That's an X. However, I do not consider this an X, and here's why. They didn't have Celgene and these other acquisitions in the last few years, so their 5-year free cash flow is skewed heavily. I would base it more on the last. I don't think this is that bad. Because their last year they did 13.3 billion, so at 140 divided by 13.3, we're talking about 10.7 or 10.8. Price to free cash flow over the last 1 year. That 5-year free cash flow number is heavily skewed by not having those other companies within them. I think for me, the biggest question is that 10.7 billion, company keeps writing, oh, it's acquisition related charges. Yes, but understand what those mean. Like, they could throw a lot of misleading information in those charges, like know what those charges are for and add them back in if they're reasonable charges to add back in as a cost to doing business. I'm not opposed to BMY. Look at this.
You want to keep going? I have a question. Before you get there, my stepson Ryan DeLong is asking, is issuing shares instead of taking on debt for acquisitions something you'd rather see?
I would see that. I'd like to see that if the price of the shares are overvalued. If the shares are overvalued, use the shares. Use the shares. If they're undervalued, don't touch the shares. So that's what I don't like here. There's an argument to be made they were probably undervalued at some point, and even now. So why were they using those shares? I don't know. Or maybe they weren't undervalued and they were just selling at this price all along. Let's see that actually. So actually, you know what? That could be a good argument made that when they made the acquisitions at those prices, they were overvalued shares and now they're undervalued. So it might not be a bad idea. Might not be bad that they did that, guys. But issuing more shares in and of itself is not good or bad. It's what the purpose is for it. But I still like to see shares decreasing because I don't like companies who make acquisitions. I feel like they do it for egotistical reasons, not for like legitimate reasons. So, anyways, that's where I stand here. But look at this, 8 pillars right here, right? We have 3 checks and 5 X's, and guess what? I'm not upset about this. I'm not opposed to all this.
Yes.
I don't like the return on invested capital, but I have to sit there and break it down by year.
Do you want to skim the 10K?
No.
That's
yeah,
it.
let's go skim the 10K. No, let's not skim the 10K.
Well,
The
we can
biggest
head
thing
over.
about that is like you're gonna have to go through pipeline. That's an important part of this BMY thing.
So then the next thing about it is pipeline. How good
Yeah.
is their pipeline for drugs? Are they issuing more? I'll look at it.
I was going to say, on a down day, Paul, we wouldn't mind skimming a 10K for some of our newer viewers. And Paul, it looks like people want to look at GlaxoSmithKline
didn't we
next.
do that?
GlaxoSmithKline.
Didn't we do that like
Glaxo.
a couple weeks ago?
Maybe, but it's down a bit, Mo. Maybe it's in the wheelhouse. But while Paul pulls up the 10K, let's head over to the Egyptian, the Nile Dreamboat, the dreamboat that is Mo, so handsome. And your brother's here. I mean...
Yeah, where is he?
He's here. He's
Oh,
here.
there he is.
Your brother's
Hey.
here. We'll get him on cam here in a minute. But all right, go ahead, Mo. Tell us about trading this
All right,
company.
So this is a 2-year chart that I'm looking at. And the reason that I pulled it out is because, look at this. This is about $67. Not really, can't get through that $67.50 area, and that's over a 2-year period. So for me, yeah, I'm going to zoom in right now, and you're going to see what they're doing. They're coming up right now into the sweet spot very nicely. Great bid and ask difference, nothing. All you have to do is get a green candlestick. Is this green? No. Is this green? No. All you need is a green candlestick to break out above yesterday's high right there, and you can go ahead and add to it. But just be aware that your moving averages, that your major moving averages, that's great. But when you get towards that $67 area, be prepared to take your profits. There's a long history of this stock not being able to break through that. What'll push it through that? Jesus Probably Christ. Approval of some new drug. Maybe, no, an acquisition wouldn't push it through that. It would be a drug related. So I know that the FDA has, I think it's their PDUFA date for Saturday for
What's
some
the PDUFA
drug.
date, Mo?
PDUFA.
It's when the FDA makes a decision on a drug. And that is this Saturday for one of their drugs. I can't remember the drug. So if you are in Bristol-Myers right now, this is the same thing as earnings. Be very careful. Remember, I don't trade on earnings if I'm on a chart because of what can happen with these gap ups overnight. So depending on what happens on Saturday, there may be some kind of big stock price movement overnight that goes into Monday.
Sharif, jump up there with your brother real quick and let's get you on camera. Now listen, if you're arguing in the comments about why Paul is wrong, at times you'll be arguing with Mo's brother, Sharif. There he is in all of his handsomeness. And you guys do look like each other a little bit when you stand next to each other. Yeah,
He looks more like dad. I look more
there
like
he is,
mom
folks.
now.
Beautiful. He's a smile, beautiful person. All right,
Yeah.
all right. Thanks, Sharif. Love you, baby.
Guys, this pipeline is incredible.
Tell me
Look at
about this 10K. Again, we're looking at the 10K for...
I'm skipping immediately to the phase 1, phase 2, and all these things.
It's lots, isn't it?
Dude, this is hematology alone.
Yeah.
Phase 1, phase 2, phase 3 approved indications. Oncology alone. Immunology alone. Cardiovascular, fibrotic diseases, neuroscience, COVID-19. Look at all these drugs in the pipeline. All these ones in bold. This is a lot, guys. This is a lot. Look how much they have in phase 3. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. 21 in phase 3 alone. If you guys remember, I was a big fan of Biogen, and they had 26 overall drugs in phase 1, 2, and 3 combined.
That's right.
They have 21 alone in phase 3. The approval rating in phase 3 is around 60%.
58.
Yeah, 58%. So that's 12 right there that they have just based on those stats that are going to get approved. Yeah, this is awesome. I actually might be a buyer of Bristol-Myers.
You're
here.
loving this.
What did our dad say about Bristol-Myers? Is Dr. Hussein still in the chat?
Yeah, he probably is.
Both the fellas' dads are doctors. Paul, what does your dad specialize in again?
Hemo-oncology.
I think that's a tooth doctor. And Mo, your dad's in
Exact
feet.
same thing.
Exact same. Feet. No, he's exactly the same as Dr.
Can't
G.
you take a joke?
Feet. Sharif thought that was funny.
Okay. So Paul, what else are you finding on this 10K? Which, folks, you can just Google 10K for Bristol-Myers Squibb and you'll pull it right up, right?
Do you know the names of these? Bristol-Myers?
No, I'm trying to read with the Myers Squibb.
Guys,
not.
to me, for a drug company, the reason I like doing the 10Ks for the drug company, I immediately jump into the phase 1, phase 2. Other than that, I can't just skim it.
So my dad's biggest issue with Bristol-Myers is not so much the pipeline and the drugs. He thinks that's there. It's the management. That's what he's afraid of.
What's he afraid about with the management?
I don't know. I don't want to talk about it right now.
Either way, risk factors. Okay, pretty standard. COVID, increased pricing pressure. Okay, makes sense.
I'm thinking about we should probably put the word squib in our show title because it's great.
Isn't he from what's that? SpongeBob SquarePants?
SpongeBob SquarePants? Yeah, that's what I was thinking. Yeah.
Squidward?
Squidward?
What's your final take on Bristol-Myers? I mean, it's a tons of X's. I mean, the 8 pillars is gas.
Yeah, but remember, guys, this is why we look at the 8 pillars. We don't just look at the 8 pillars. When you guys tell me, when my friends all want to get the 8 pillars and just see how many X's and checks are, there's more to it than that. You have to look at the actual numbers. I provide this to give you guys a quick recap, but if you'd looked at the numbers here, you'd been like, wait a second. This should have been like the revenue growth being so big should have been a big indicator like, okay, why do they not have a PE at all? Why do they have negative profit margin? It doesn't even make sense. I don't get this 5-year invested capital thing. I love the return on the book value growth. The book value growth is awesome. 13.9 and 28.6 in the last 5 years. I mean, that's pretty solid. These return on assets and equity and invested capital are going to be heavily skewed for several reasons because of the negative, the loss, and the big jump in debt and equity in the company due to their acquisitions.
All right, there you go. That is Bristol-Myers. Do you want to keep going, Paul?
What do you want to talk about?
Well, a lot of people are asking for GSK. I know we've done it recently, but we could zip through it a bit.
What is it?
GlaxoSmithKline.
Oh, GXK.
Oh, wow, Paul. It's down a ton. Look at that. Would you look at that? We could look at that too, Don.
CCL is down?
Do you want to look at GSK?
Let's do it.
This is a British multinational pharmaceutical company headquartered in England. England.
Where are you going? England. What's that from?
Wayne's World, right?
Wayne's World.
Oh, gosh. 2, because they go...
Of course it's 2.
Got it. GSK is the ticker symbol, guys. Let's get after it.
$91 billion company.
91.
PE of 15.9, check. Profit margin of 16.9, check. Off the dribble, free cash flow last year was 6.2. They paid out dividends of 3.9. Very hefty dividend yield, 4.3%. Very, very hefty.
Wow.
That's a nice dividend yield. 5-year return on invested capital, a little light, 5.7%. Really light on the return on assets. So here's an example of a company we want to see around 10% or so. The market's going to do about 10%. So in order to justify this, we got to see a big discount. We got to see a big discount on the company in order to justify a low invested capital. Invested capital is the amount of money the company basically makes on its capital. Like when it reinvests its capital in itself, either through debt or equity, they're making about 5.7%. That's not very good. Okay, over long periods of time, according to Charlie Munger, a company will probably make about their return on invested capital in terms of the growth of the company. Now, if you buy it at a super discount, because I won't get into that right now, but right now we have 2 check marks.
Speaking of growth, we did hit, Paul, yesterday we hit our first 1 million views on our channel.
That's right, we did hit 1 million views on our channel yesterday.
So we thank you all out there.
850,000 of them in the last 3 months.
Incredible. Thank you all out there for watching, of course. And of course, our patrons, I love you. Let's keep going with GlaxoSmithKline. And pillar number 3 is revenue growth. Paul, what is it, baby?
27.9 to 34. So check mark there. Definite check mark there.
Profit growth, pillar number 4.
Net income, 912 million to 5.75. Massive check mark there. Yep. So guys, we're seeing, but remember, go look at previous years, 8.5, 2.7, 5.4. So I don't know what happened here, Sethi. They probably had a big special, yeah, they did right there. 8.2, okay, that's why there. They had a big loss there, okay. All right. So these are the things you have to look at, guys. When you see big jumps in profit, you're gonna understand why that is. $8.3 billion. They probably sold something off and made $8.3 billion on it. Number of shares outstanding. X, but not by much. 2.43 billion to 2.49. I find with European companies, they don't issue or take away a lot of shares very often. Have you noticed that, Uncle Seth?
Don, will you make sure you get GSK up in the top right corner? Again, folks, we're looking at GlaxoSmithKline out of England. GSK is a ticker symbol. Paul, talk about the shares again. I'm sorry, I missed you.
They're slightly up. So it's an X. It's slightly up. Okay. European companies, for some reason, don't tend to issue many shares or take many shares away, I've noticed.
Okay. How about pillar number 6 is current assets over current liabilities?
20 billion versus 22 billion. So that's an X.
Uh-oh. They're under?
Yeah, they're under. But they tend to be under for the last few quarters.
Oh, boy. Now, someone asked, Info just asked, why do you use free cash flow to determine the value of the company? So go over this one more time, what we're going to do
Great question.
next.
I like free cash flow versus net income because net income can be affected by accounting charges, SEC rules, accounting IRS rules, while free cash flow is cash in, cash out. Can it be manipulated? Yes. Is it harder? Absolutely. But free cash flow at the end of the day is what the companies will use to pay dividends, buy back shares. It's the actual money in your hand. If you had a company that reported $1 billion in profit every year, but only got cash of 200, do you really care about the $1 billion in profit? No. You're going to be like, well, wait, I want the 200. You're going to be like, I'm going to get the 200. I don't want the two. I want the higher number. Over long periods of time, free cash flow and net income should equate, but it's also a way to look for fraud and things like that. But I like free cash flow because at the end of the day, free cash is what drives the company's value. Is what drives company value because that's the money that comes into the company they can use to pay out all these other things that are good for investors.
Nice shot said GSK is cutting their dividend too. He thinks they're struggling. So
oh boy.
Yep.
Okay.
Are we on to free cash flow growth?
Yes, we are.
Look at it. Sorry, go ahead.
Okay, so free cash flow is cash from operations less capital expenditures. Last 5-year average is 5.7 billion. It was a check from 5.02 to 6.2. What was it? Market cap? 92 billion.
91.
91 divided by 5.68. That is definitely less than 20, so check mark there.
Pillar number 8.
So we have a check mark for both 7 and 8.
So we have all checks besides shares outstanding and current assets over current liabilities with a 4.3% dividend. This is for GSK. What do you think, Paul? You're stumped here at the moment.
I'm not stumped. Why does he think it's struggling? Why does he think Bristol-Myers is struggling? I mean, GSK is struggling.
Nishad, maybe you can tell us.
Did you look at their 10K?
10K?
Yeah.
No.
Oh, okay. Let me see if they even have a 10K.
I'm willing to bet they have a 10K.
Well, in the sense of like versus the European version.
Okay, while Paul pulls up the 10K, Mo, you want to get after it a bit
Yeah, sure.
with the GSK?
By the way, GSK has good cancer drugs at least. I should probably erase this, shouldn't I?
Oh, Lawrence is saying GSK is splitting up their drug and consumer healthcare into separate entities.
Oh, really?
Separate publicly traded entities?
Lawrence, if you know more about it, let us know, baby. Oh, yeah, someone else is, Big Chungus is saying, who requested this, they're splitting into 2 companies. It'd be interesting.
2 companies?
Yeah, that's what they're saying.
Interesting.
Keep going, Mo.
All right, so we for sure have some variation of a 50% rule stock right here. And those of you who don't know what the 50% rule is, you have your high, you have your low over the past 18 months, and then there's that middle range where the stock cannot break through. So I'm just gonna draw this 50% line. And that area creates what is called overhang. And overhang is just negative pressure pushing down on the stock. So every time that the stock starts moving up on you like this, people that were they go and sell and they take their profits, and the stock price comes back down. Again, it makes a little bit of a run, comes back down, and that just continues to happen over and over until there's something big that happens. And maybe this is what you guys are looking up right now. Maybe that's going to be what propels this thing through. From a short-term perspective, though, let's zoom in and see what you can do. Just moved into the sweet spot, which is great. You have a bid and ask difference of 1 cent, which is perfect.
Bid and ask.
If you want to do something with this, you absolutely can. This would be good. You just need a green engulfing candlestick over yesterday's high. And what I would ideally like to see is that this red line continues to move up towards 80%, and on you go making money. Just know that because you're in that overhang region, probably start taking profits around this $40 a share area. So you have about a little under $4 to run to get a trade-off.
There's another name on the chat here, Paul. It says Trader Mo's underappreciated lower quads. I mean, they love this guy out there. You guys are incredible. Go ahead, Paul. What did you find for the 10K under GSK?
So the 10K doesn't exist because it's a foreign. So I just went and Googled it and I went to their website. Well, there's a lot of drugs in this pipeline here. Look at all this right here.
Those cancer drugs, Zejula, that's very big in the ovarian cancer world, and it's very effective.
Phase 3s, 1, 2, 3, 4, 5, 6, 7,
I think Zejula is a
8,
big
9,
revenue
10,
driver.
11, 12, 13, 14, 15. 15, phase 3 for sure. Guys, there's a lot here. This is their pipeline. Anybody saying their pipeline isn't good? I don't know. Maybe unless these drugs. Remember one thing, guys. Having a pipeline is one thing. Having that pipeline mean something and add actual value to the company that these drugs are actually very marketable is a different thing altogether.
Yeah, you got to execute.
Well, not only execute. I can make a pipeline for a drug that will help me fight drywall and infection. I just made something up. The whole point is how much does that matter?
And how much revenue does it drive?
That's my point. How does it matter? It doesn't matter at all,
yeah.
so it's not going to drive any revenue.
But those diseases that it's talking about, I mean, those are big popular diseases. It wasn't like that one that we were looking at the other
Well,
day.
not popular in the sense of like people want them.
People have the disease.
I know.
Like that one we looked at the other day, it was like Lambert-Eaton syndrome, and 3 million people in the world have it. So these are different ballpark.
Yeah, so there's a lot of drugs in this pipeline here. So I guess your next task is to sit there and see which ones have the most market potential here. Like oncology. I mean, oncology is always a very popular. I mean, people are not going to stop getting cancer.
It's been about 3 minutes, and I haven't been on the show. And since it's all about me, I'm going to bring it back home to Paul. What is your final take on GSK? What do you think, baby?
I'm not entirely opposed to it. Mm-hmm. But again, just like everything else in the drug world, in the drug pharmaceutical world, you got to understand what you're getting into. Are they going to be able to generate a lot of revenue off this pipeline?
You know what we should do?
What's that?
We should have a drug show that's all about drugs and bring in a doctor and sit with us it's gone through the pipelines and talk about them.
Yeah, maybe.
Well, basically all of these come down to what are the pipeline? You got to go through it. Maybe they'd know something.
Yeah, I mean they do, but it's also one person's opinion on it. Like even though we asked our
True,
fathers,
but
we trust our fathers.
It's better than our opinion.
What was that?
It's better than our opinion.
Well, maybe, or somebody else can go sit there and do more research and go, okay, let me go find out what. Because I'm sure there's a website out there with doctors who assess these drugs.
Yeah, there's blogs.
Yeah, that's the thing to do, and that's part of like the in what's his name's book, Common Stocks and Uncommon Profits. Philip Fisher. Mm-hmm. What's he call it? He calls it the what's he call it when you go talk to people? Not the brouhaha. What's it called when he goes and talks to people? It's like it's that term he uses.
What's
like,
scuttlebutt?
Scuttlebutt.
Yeah.
Something like that, where it's like go out there and talk to people, go read and talk to people in the industry and see what this company's actually doing.
Yeah.
For very little effort, you can probably find a lot of information on these people. You have to read the 10K. Just go Google. In fact, Sven Carlin talks about use Google to your advantage. Go Google everything you can to find out about the company right then and there. It's just Google. There'll be a lot of scandals out there with scandals. It'll tell you, if you want to Google each one of these drugs, they'll tell you how important it probably is. For the amount of time you guys probably spent researching the next car you're going to buy, you probably researched 5 companies and their pipelines. Just do that.
Mm-hmm. Paul, all right, that's our take. GSK, interesting stock, interesting future. Paul, are you buying the dip on CCL today, down 7.3?
What's it at?
What's the price? No.
What, 27?
You want to pull it up, Paul? Give it a look, see people are interested?
Well, it hasn't changed, guys.
What, you still love it?
25. I think I wrote puts on them. I wrote puts on them, Mo.
Yesterday?
Yeah, I think I did.
Starting at what price?
I think 25 or 26.
Oh, really?
Yeah.
Nice.
Listen, I believe in Carnival long term. I think that if you're able to buy it I think it's right now after the diluted efforts of diluting shares, I still think it's a $40 to $50 company. Would I be buying it at 30? No. Would I be buying it in low 20s? Yeah, probably. I think that we're coming out of this. I think we're closer to the end of this pandemic / shutdown than we are to the beginning of it. And we're a year removed from the beginning of it. So what do I know though? That's what investing is. It's all about assumptions. But guys, for those of you who are not patrons, I must reiterate this.
Please do.
I have not talked about this enough. Guys, everythingmoney.com used to be 14, used to be 8. Mm-hmm. Now it's 17, on its way to 49, at least. Look at all the things you get. The biggest one of which, the Discord community and our software. These are all going to be in the software at some point. This Discord community is amazing. It has 1,600 people in it right now. Here's our competition, 200 a month, 200 a month, 35 a month. Would you rather pay 17 or 49 or these prices and not get everything? Guys, this software is amazing. I use it, I love it, everybody uses it, says it's the best. It hasn't even come out. We had a beta version with a bunch of bugs and people were still writing me messages going, this software is incredible. I'm working on it. I have the portfolio section going. I'm going to be making it better and better. I just talked to the development company to add more and more data. It's going to cost a lot, but it's going to be awesome. Trust me on this one. Go sign up. It's insanely awesome. It will be great. It'll get better as the years go on. Just please go sign up if you want to learn, you want to get serious. We're going to be adding more and more to it as time goes on.
If you're interested in trading, Mo, tell them what you do for your traders in your, it's not the most muscle tiers, it's of course the middle tier of our Patreon is the Bidnask Nation, all you Bidnaskers out there. Yep. Mo, tell them what you're up to in that tier.
So if you're interested in trading, chart reading like we've been doing, or like you've seen in my videos, my tier in the Bidnask Nation is the place to come. We do long-term trading, which is weeks to stay in a stock. We can do swing trading. We can do day trading. Whatever your heart desires, we'll get after it. I make short videos in there. I answer your individual stock questions. I post all of my specific trades in its own channel. It's a great community, and the people in there are just making so much money. It's incredible. I mean, we have people in there making $5,000 a month, and this is their second month trading. It's incredible.
I got a great question here from James. He says, I have a question. If you earn 10% a year in stocks, you're doing great, correct? That's true, Paul. You basically say like
if you follow the market over long periods of time, you'll do about 10% a year.
And you're striving for like 12 to 15, right, Paul?
Yeah, maybe a little bit more with options and things like that.
Okay. And what is the return when doing what Mo does compared to just buying and holding? Now, there is a learning curve, Mo, which you and I are going through right now. I started the Trading 101 playlist here on YouTube, and hopefully Mo can teach me a little bit. I'd love to get into this a little bit more, Mo, because you know I feel like this could be a hobby of mine that I can move into.
Yeah.
So actually, talk about the returns, what you're looking for.
You can for sure beat the market doing what I'm doing. I rarely lose, and when I do lose, it's very minimal because I make it be minimal with stop losses. So I am more conservative. My returns are not going to be 50% like some of these other people that are day trading and just trading all this hype stuff. But you can easily return 13 to 15% a year with minimal losses. What I do is a lot more boring than you're not going to be catching the Neo and Nikola and stuff going crazy. I'm in Cardinal Health right now. I was in H&R Block. So I'm in these companies that are a little bit more slow to climb up the chart, but it's more certain returns, I should say.
Captain Car says, can we do more covered call videos? We are, guys, I would say the channel's hitting us pretty fast, and we have so much in our pipeline in terms of a golf and candlesticks down the road about what we can do with videos. Mo and I had a luncheon yesterday, actually, Paul, and this is news to you, but we're just brainstorming some things, and these are videos that Mo and I came up with, all these sentences of just like, we could do this video, and we could talk about this, and what level, I mean, just like bonkersness of like what videos we could do for you guys. And so
this is more than just becoming a YouTube channel. Like, this is the whole point of the software is like,
you know, something you said to me a couple weeks ago when we were driving, you said, I don't know what rang with me, but you said it's everything money. And I was like, we literally have to become every single thing money. We have to have some kind of tie to it and teach it.
Of course, that's why we're going to build a new studio where it's going to be a lot of reporting as well, like during the day. And listen, it's just becoming its own like CNBC thing with in Market Watch, where we're providing news, we're providing data, and providing our insight on it. It's just, listen, it's just a.
So the point of the point of the notebook, besides just being filled with slop, is we really want to fine tune what we're delivering, get our 8 pillars of what we're trying to teach you guys in order with ourselves. It's all happening pretty fast, and we're obviously trying, delivering over 20 videos a week, and the live streams, we're working hard for you guys, and we're going to continue to do so. So
there are only 3 spots left in my current level for the $17 level.
17, the lowest level?
Yeah, lowest level. So guys, get on it.
So Aaron keeps asking along similar lines, is when are we going to get back into real estate, Paul? Or what do we have plans for real estate this year?
Well, we did a real estate Patreon video.
That's right, Aaron. Let me know if you were there. Paul, 2 weeks ago on a Wednesday, did a Patreon-only real estate 90-minute session where he took your questions. It was wonderful. We're thinking in the next few weeks, with some vacations coming up, that the boys may handle some live streams, and that Mo and I may go live on Wednesdays to talk even more about trading. So maybe expect that in the next couple of weeks. We'll certainly announce it. Our Tuesday, Thursday live streams will always be here. But I think Mo and I might be going live on Wednesday to address some of those trading concerns.
Hey, Seth, can I plug something real quick?
Please do.
Only 2 spots left.
So this Friday morning at 10 a.m. Eastern Time, I am going to do a 90-minute to 2-hour trading-only question, answer, teaching stream for Patreon members only, all tiers. So come in, bring your questions. I'm not going to answer individual stock questions like we do here, but I want to get you guys comfortable with charts and so that you can go in and feel more comfortable and I can answer all your questions. Because we've grown so fast, it's overwhelming for me at points. So I want to come in and reintroduce it to everybody, and we'll do it that way.
Want to read them all?
Yeah, I haven't gotten the emails.
Oh, sorry.
Yet.
I thought you had something to say.
No, I was laughing about. It's to be political, but it's not political. Speaker Pelosi says it's really important to lower the voting age to 16. I won't get into the politics of that, but this guy tweets, when I was 16, my friends and I bought a live lobster, put it on a leash, and walked around the neighborhood at 2 a.m. Now, granted, that means I would probably do the same thing. I'm 39 years old, going on 40, but it's just funny to read that.
I found a video, Paul, from I found an old video camera from 1999, New Year's Eve. Beth and I at our mutual friend's house, Rob Navoa. And boy, did I think I was the cock of the walk.
So was it
back then.
1999, January 1st, 1999, or January 1st, 1998?
I'm sorry, 31st of 99. I mean,
Sorry, 31st, 1999, 2000?
Yeah, the millennium, I guess.
Okay.
Yeah.
Well, no, the
and-
millennium was the 2000, 2001, but go ahead.
Well, I see. So, you're right. We weren't closing that year. So, but boy, oh boy, I did not want to watch that twice. So, but
Was it bad?
it was just embarrassing of like what I was like.
Seth, we're going to make fun
at
of ourselves from 20 years from now about
18.
today.
You think?
Yeah,
We are-
100%.
I make fun of the way I looked
look
12
at-
years ago, 10
yeah,
years ago.
Look at it 5 years ago.
I guess you're right. I mean, we're putting a lot here on video here, Paul. I mean, it's crazy.
Well, we can always delete them later.
I guess that's true. I'd like to delete this one with that Michigan shirt on. How are the Everything Money NCAA brackets coming?
Oh, that's a great question. Let's look at that. So, guys, for those of you who are patrons, I put together just a giveaway. I did an NCAA bracket, $2,000 for first prize, $1,000 for second, $500 for third, $250 for fourth. No entry fee because I just want to do it for everybody. And let's see here. Everything Money. Who's in the lead? I think Deb's actually in third place.
Are you kidding?
No, there's Deb.
Like Deb?
Deb.
Oh my God.
Deb's in the legit third place right now.
Is this Everything Money or this is Everything
This is Everything Money. I'm in 32nd place.
Who's winning?
So I don't know what name this is.
Oh, right. The names versus the...
Well, I don't even know what this is.
I see you guys. Yeah, we do have this problem because some people have a YouTube name, a real name, and then a Discord name, and then a different Patreon name. So if I can't keep up with you, you know I love you anyway. So
So I have 38 points with a potential of 134. Deb's got a really high potential 150. I mean, Deb's looking good here.
that's right. And Brett's saying, please don't remove the Paul peeing break from the last live stream. That was so epic, Paul. I mean,
By the way, I think Deb has the highest. Deb has the highest max points.
Omar says, literally watching the stream as I'm driving. That's a great choice, Omar. I appreciate that.
Wow. I don't think Deb knows that she's well, she probably does know actually. Come to think of it. Let's see which ones she got wrong. Well, we all got that one wrong. Oh, she had Ohio State going to the Final Four. Sad.
As the show comes to a screeching halt, Mattia is asking, is there a Patreon-only live stream coming on portfolio management? Paul, what do you think about that?
If you want to do it.
Yeah, it'd be fun.
Is Michael G my brother, or is it somebody else trolling us?
I don't know.
All right, so folks, let's do this. Let's recap a bit, Paul. We've been doing this long enough. The Fireside Chat, the Patreon only Fireside Chat, exclusive Fireside Chat. We go for about 90 minutes. It will be April 16th in the evening. I hope that's a Friday because that's what I have down in front of me. The Tesla promo. Make sure if you go to the homepage of Everything Money on YouTube, you can see that beautiful Tesla promo. We're halfway home to our 50,000 subscribers where someone will be getting a Tesla from Uncle Paul's. Uncle Paul will swipe his credit card, and I wonder what color it's going to be, Paul. My wife likes the white. I drive a red. Who knows? Oh, on Pinterest. Paul, do you want to look at Pinterest real quick before we go?
Not especially.
We'll get
Who's Calvin? Is Calvin a Patreon?
Calvin, are you a Patreon?
Probably not.
I've never seen his name before.
Well, if not, we still love you. What if he just lies and
How
says
is
he
Pins?
is? How is Pins?
I would assume not good. That's just my guess.
Look at this.
Yeah, that was my
They
guess.
lose money, so this is a bug right here. We got to fix this. They have 7 X's and 1 check. Shocker. Return on assets negative. Return on invested capital negative. Free cash flow $11 million. Value is $44 billion. Avoid. Next.
Calvin, there's your look at Pinterest, and that'll be a short
Guys,
video.
wait. You know what the funny part is about this? We laugh about this, but this is literally how I look at stocks. I look at this immediately and just go, yeah, this, yes. Because I know already I'm too early on this one. This is not the company I'm going to look at because this one's way too early. $44 billion market cap on $1.7 billion in revenue with losses. I immediately know by looking at these three numbers, I'm like, okay, I'm way far off here. Maybe add a fourth one here. I don't even look further going. It's not my company.
We're getting some questions from everyone overseas. Legally, we can't say that you're going to win the Tesla, but if we could...
No, you're not going to win the Tesla. If you win the Tesla, you don't get it.
So we will do you right. I assure you, Paul has not spent hundreds of thousands of dollars to make this a YouTube show.
To F people over.
To F people over on a 38 grand.
That'd be pretty dope.
On Tesla.
That'd be a hard move by me.
Yeah, it would.
It would be the ultimate.
Sorry. The good news is, even if I F you over, the software is incredible. The software April 15th is going to be absolutely incredible. And it's just going to, every single month, going to get better and better and better.
Mason is saying that your Pinterest review right there would be perfect for TikTok because that would be the whole review right there. It's just avoid.
That's true.
So, do you want to do a once over on Square? We haven't done a full video on Square in a while. Can you pull it up? Everyone's always...
Okay, you keep telling me one more and then you keep going.
Well, that's why I love the show and I love you, Paul.
Square's going to suck.
Square's going to suck?
It's going to be awful.
Yeah, Square's going to be
It's going to be awful.
Okay, let's look at it.
Well, yeah, this is probably worse than Pinterest. Oh, maybe not.
Wait a minute.
Okay,
now.
I'm just going to do the end of the show recaps. $100 billion market cap, $9.5 billion in revenue, so 10.8 to 1. Net income of $200 million on $102 billion. That is 0.02. That is 2.24%. PE of 480. That's pretty awesome. Free cash flow, average last 5 years, 183 million. So they're currently selling for, what's 102 billion divided by 183 million?
I have no clue.
520? That's sick.
480 PE? Oh boy.
Yeah.
Square is the Tesla of fintech. Someone says.
Yeah, exactly. 5-year return on invested capital is 1.3. It's probably a little skewed there because they probably had losses over the years. 5-year book value growth, 32.3%. That's a lot. Good for them. Their X's. XX shares outstanding have increased by 36.7%. Their price to free cash flow is 557. They have a couple check marks: revenue growth, net income growth, assets over liabilities, and cash flow growth, which are all expected in fast-growing companies. Again, I'm looking at saying I'm going to wait. Like, what's their potential revenue? What's this market revenue? What's their competitor? What's a big competitor? PayPal?
PayPal.
PayPal,
the big thing
Stripe.
No, go ahead. Go ahead.
Stripe is also one.
Yeah, the big thing about Square is that you're right, Stripe is. The big thing about Square, though, is that they actually have, like, they're in stores. They're out there. PayPal doesn't have a device that's, like, there yet. You know what I'm saying?
True.
That's the advantage that they have.
That's true. That is true.
Yeah, Square does have that nice little system that's in every
Yeah.
cookie, coffee shop.
I mean,
all
I went to the
way up.
Cleveland Clinic the other day. Every single kiosk to check in had a Square machine on it.
And
What
as
do you
a
do with the
small,
Square machine?
Put your credit card in.
well,
to pay.
and as a small business owner, you can, Mo, I can have them mail me one of those chip readers
Yeah.
and all that. It just comes right to, it's like in a little envelope, and I
Yeah.
use it for I'm swiping credit cards in my
Exactly.
on the move as well. So
So PayPal does about 21.5 billion in revenue, but PayPal is also overpriced. 68 times free cash flow.
Teaching Wealth is saying that Stripe is private. Lawrence is saying they're against chip and pin.
What do you mean private?
They're not publicly traded. Stripe is.
Oh,
Not.
Stripe. I think it's Square.
Maybe I did. My apologies.
No, you're good.
No, you probably said Stripe.
Stripe is private. Yep.
Kathy Wood is bullish on Square, so I'm out. Are you done?
You know that scene in
I think this is a good one to go over.
you know that scene in and by the way, thank you Mina and Mozam for signing up for the Patreon. That scene in The Big Short when he's at lunch, he's at dinner with the guy for sushi, and he stands up and goes, "Find out whatever this guy's buying and short all of it." Kathy Wood, find out what she's buying and short all of it. I don't really mean short all of it, but it's going to end. Like, I look at this saying, this is the ultimate in arrogance about Kathy, like saying, like, oh, Tesla will be a $3 trillion company, throwing all of the 150 years of financial history, stock market history we have out the window and saying it's different this time. You ask any good investor the four most dangerous words, it's different this time. It's not going to be different, guys. It just might take a lot longer to happen, but it's not going to be different.
People are saying now. I'll end with this.
Oh, you're actually going to end? Good.
People are
My
saying.
throat's killing me.
Sorry. People are saying we need to do a cooking show. I reckon Seth is a great chef. I mean, do you guys want more We've talked about doing fun videos with ourselves that aren't just 8-pillar or Paul demeaning you. It's more like
I got told I wanted to play chess and put it on a video, and Seth's like, no.
well. Paul said like he just wanted to fire up live and play chess.
Do you know how many? We have like 3 or 4 patrons who challenge me in chess on chess.com.
I just didn't know if it was on brand
I'll do workout tutorials
enough.
for you.
Oh, but your cooking's on brand because it involves you now?
No, we could probably.
What are we gonna do, honey?
No, we can do. No, we're not. That's why I'm asking. Now, if I am doing, by the way, I'm cooking right now, Paul. I'm making a butternut squash soup with that honey. You know.
Oh my God, really? Don't care.
Oh my gosh, this guy.
Can you tell Paul the exact ingredients to make it?
You don't know this?
What?
Nothing's more irritating to me than when people who cook try to explain to me how they're cooking. I could not
Lord.
care any less about your cooking skills
Paul.
than anything in the world. I'd rather have Osama bin Laden explain to me how he orchestrated.
Okay. Now I'm just gonna cut the show here now.
Literally, food conversation is beyond boring.
Beyond Meat, which is coming out later this week. Beyond
if
Meat.
you watch the Food Network for fun, I'm not going to criticize you for that. But if you start talking to me about food and the show you saw on Food Network, I hope you die a horrible
Paul, how
death.
dare you? Okay.
We just went to Wendy's though; it was pretty good.
Well, the show has come full circle. You know, I'm talking about people dying, getting their heads cut off in cars, and Paul's telling you to kill yourself if you're investing in Tesla. And it comes full circle with him demeaning you about. Anyway, that's our show for today, folks.
Guys, in the guys that are in my tier,
Go ahead.
right in their square, because I want to go over square and teach you something about this after the show is over.
Oh, thank you, Mo.
Yep.
Make sure you guys tickle the thumbs up on the way out. Fondle that thumbs up. We'll see you on Thursday at 1:30 as always. And yeah, that's it. Mo in the morning.
Dark Knight said Paul has issues. I don't think he has any idea.
See, Seth's cooking is on brand.
I don't like
agree
Wagyu. I
with
don't
you
like
with
any.
that one.
Yeah, somebody told me this last summer that my whole hatred of food is like a shtick. It's not a shtick. I don't do it to be different. I just don't care about food.
We will set up a beautiful dinner with the ladies, and you're just like, do you want to just go get like something, like McDonald's or something, and go sit in our cars? I mean,
I don't get to me, food is not a. To me, food is just you eat it. You can enjoy food.
Sustenance.
Well, no, I'm not like that because if I was like that, I'd probably be 150 pounds versus 180. But if I looked at food as just fuel, I'd be a lot more ripped. I just look at food as like, okay, I do it to enjoy the eating part of it, but the whole cooking, and it tends to be this like, oh, then I do this. I'm like, oh my God, that's so amazing. Tell me more about how you sprinkle the salt on there.
they're looking for a Paula update, Paul.
Oh boy.
Oh boy.
This is awkward.
Awkward.
Maybe we should just end right now.
Is Jose on the show or is he blocking me now?
How about that?
Oh, he's on.
All right, guys, that's our show. We're just messing around now. We love you. Patrons, sign up. What are Paul, let us know what the next tier is going to be when this one fills up, and the last people to get it, we'll let you know what's going on. And yeah, thanks, guys. Tickle the thumbs up. We love you. Make sure you subscribe and come see us again on Everything Money. See you guys.
Bye,
Thanks
guys.
so much. Bye. Appreciate it.